Hi, Kat. That's right. So we've seen the Dow, for example, hitting an all-time high last week. Also, equities in other markets have been going up. It looks like investors are shying away from more traditional types of money safekeeping, say for example bonds, and they are because the interest rates are very low, and they are moving their funds into shares. This may be the case. On the other hand, you're quite right on the pounds. The pound has been suffering pressure caused by weak data coming out of the UK, which will lead to a more or less continuous stimulus policy by the Bank of England, which in practical terms means devaluing the pounds, and therefore it becomes less attractive to investors. We've seen the pounds hovering around the 1.5 mark in this last few weeks, and there may be space for further devaluation of the pound against the major currencies. It's quite possible. It's quite possible that some members of the Bank of England will be happy about it. A weak pound against the other major currencies, namely against the euro. As you know, the eurozone is Britain's greatest trading partner. A weak pound against the euro will mean cheaper exports, and therefore that will be good for the British economy as a whole. Most traders will probably be looking at what's been happening in the last few weeks and may have singled out some of the indices, for example, the Dow, as an opportunity to go long. This is what most people may be looking into and thinking. Other traders may be looking into the possibilities of shorting the pound against the dollar, for example. That's right. That's right. 2013 so far has seen an increase in volumes traded. 2012 was a very difficult year. There were low volumes. This was probably caused by a stagnant market, so there wasn't much going on. The traders didn't have many points of reference to guide themselves. Everything just seemed to be at a standstill, waiting for something to happen. Whilst since 2013 came along, we've seen a rise in risk appetite trading, so things are moving along better now, and as a consequence we've also had larger volumes traded and more people trading as well. That's definitely good news for the industry, yes. It's definitely good news for the retail trader, because a market that is active and dynamic is a market that moves, and without movements you don't have any trading opportunities.
Ricardo, thank you.
You're welcome. Better?